Hey guys, Lods here again, sharing with you once again my technique and strategy, how I approach the market. Simple guys, I trade off extreme highs and lows. I use major support and resistance points and trend lines and price action, and obviously my favorite indicator, which is called the TDI. So guys, looking at another example, we have, alright guys, we're just looking at the Australian CAD. Quite similar to the other examples, the Australian is quite a good pair. It obeys trend lines, it obeys support and resistance points, so it's a good pair to trade if you've managed to pick out a setup. So let's just quickly looking at this. Same thing. First thing I do is I always look at a trend setup. Point 1, point 2, point 3, confirmation that's a trend setup. You'll probably be looking to go short around about this point over here, and after that we just let the market rally and we just let it do its work. I always wait for the market to present itself to me. I don't chase it, and especially if I see it going to further lows, I don't follow it in that direction. I always wait for a setup. Anything that looks like a double bottom, in this case, as you can see, this would have looked like double bottom, probably been on a long position here, but I probably would have been stopped out. And once I have a setup, whether it be a double bottom or a inverse head and shoulders, I always jump onto my 15-minute market maker setup. So as soon as I have my 15 market maker setup, I always look towards my checklist. So this point happens to be my right shoulder. Right shoulder, how do I know that's my right shoulder? Because prices broke this support point. As soon as prices broke this support point right over here, immediately my lights are on, light bulbs are on, my warning signs are on, that you've got the first half of the inverse head and shoulder pattern working out. As soon as that happens, I jump onto my 15-minute market maker time frame, looking for the setup. This point over here, right over here, is this point over here. Same thing. This is simply a H4, and the market maker is a 15 minutes. So I wait. In this case, the peak has been established in the early hours of the morning. There's the 50 and 200 EMA crossing. The blue box, it's less than 50 pips. This point over here, it was just one big spike. So I can safely say that the blue box is between the 800 and 200 EMA. And then prices, as you can see over there, they are bouncing on the 200 EMA. That's a buy setup. I'm net long over there. I'm net long. So as you can see, it plays out. That probably been playing me out the whole day, because I'm not panicking. Even if the market does go against me, this is another point of reference for it to go down, probably gonna give me a double bottom, but I'm not panicking because obviously of my account size and the lot size that I use. I can handle the heat because I use proper risk management. I know how to use my lot size and risk management. And just to go back, when we're at that 15 minute, now we're at the 4-hour chart. Prices are probably, as you can see, this is a support, now resistance. Prices are bouncing off the resistance. People are probably selling over there, assuming that this downward trend is going to continue. They're probably selling over here because they see this price action happening over here, where prices are bouncing off the support, now resistance, only for the market to be snatched away and it going completely high again. So in that case, I managed to pick it up because of my market maker template. Although it went throughout the next day, Asian session still holding, just spiking the Asian low, and the price is just shot up again. So that's how I balance the two guys: price action and the market maker strategy.